So we might get started. So thank you again, everyone, for coming along to the Australian Circular Economy Hub, ACE Hub, August webinar. Today we're talking about regenerative finance with Bank Australia. Great that some of you are already putting where you're located in our chat box. Thank you very much for that. So with that in mind, I would like to acknowledge the traditional owners of the land on which I am joining you from today, of the Jagera and Turrbal people, as well as the lands on which you are all located and joining us from, and pay our respects to elders past, present and emerging. So my name is Dr. Nicole Garofano. I am the Head of Circular Economy Development at the ACE Hub. The ACE Hub is funded by the Australian Government and our sponsors Bingo Industries, Keep Cup and Planet Ark Power. And our mission is to facilitate this transition to a circular economy in Australia. And we're doing that by providing a knowledge platform, a platform for knowledge sharing, I should say, and collaboration. And today's event, like all of our webinars, are just one example of how that knowledge sharing is taking place. So some quick housekeeping. This event is being recorded, so I hope that's okay for everyone. And it will be available to watch next week. So for those of you who know that there are people who couldn't join today, you could share that link with them next week once it appears on our website. For today, we're using the chat box to connect with everybody who's in the room. But if you do have questions, please use the Q&A box, as we'll be monitoring this once Darren has finished his presentation. In the Q&A box, you can also upvote on questions. So if there are particular questions that you think might be very interesting to respond to, you could upvote on those. So today's topic, we're talking about one of the three core principles of the circular economy: regeneration. We need to come up with new ways of generating and investing income that supports regeneration. And that's where regenerative finance comes in. Now, we're using the term regenerative finance to describe a financial model that sees money as a tool that can be used to tackle social and environmental challenges, and that those actions can actually drive positive system change. So if we think about divesting from exploitative and extractive industries and directing investments into projects that have a positive impact, this is where regenerative finance acts as the enabler of this circular transition. So one of the examples of regenerative finance is what the banking industry calls impact investing. So in fact, in 2020, there was an Ernst & Young report completed for the Department of Planning, Industry and Environment in New South Wales and with WWF Australia. And they calculated that Australia's impact investment market actually had more than tripled in just 2 years, from $6 billion in 2017 to $20 billion in 2019. Now, if this doesn't indicate that people are becoming more savvy and more interested in where their investments are supporting, I don't know what does. So in today's webinar, we're going to learn more about regenerative finance in a circular economy from Darren Dawson. Darren's role is the Head of Impact Investing at Bank Australia. Bank Australia is the first customer-owned bank in Australia, and it's the first Australian bank to be part of something called the Global Alliance for Banking on Values. It's an international network of banking institutions delivering positive social, environmental, and economic outcomes, the three pillars of sustainability right there. Bank Australia is the only bank in the world to own a conservation reserve, as just one example of the many activities that they invest in. And Darren has worked in banking and finance for over 20 years in both Australia and the UK. He believes finance should be the positive force for change, and he's really here to tell us today about how this philosophy is enacted at Bank Australia. So to get everyone warmed up, we're really interested to hear a little bit of your experience in this topic. We have a quick poll question for you all. Now, what we're interested in is how confident are you that you know what your bank or super fund is doing with your money? So we've got three choices: that you're very confident, that you, for example, might monitor your bank's profits and investments regularly, or that you're in regular contact with a representative from your investment outlet. You're somewhat confident, so you might have done a quick Google search, or you've read a little bit when you first joined them, but you haven't done much since. Or that you're not so confident and that you haven't looked into it at all, or that you're just not sure. So let's have a quick look and see what sort of confidence levels each of you have in the audience on that question. I'll give that a little minute. Okay, somewhat confident, not confident. Interesting. Okay, well, we're hoping that today's session with Darren will help to provide you with some information on the types of questions that you can be asking of your bank or your investment house. So I'd just like everybody, before we jump in, to really embrace the concept of systems thinking with this webinar today. So rather than asking what regenerative finance can do for you or your company, perhaps let's ask instead about how you can shift your ways of doing business to create a thriving future, not just for ourselves, but also for the planet. So without delay, I'll pass on over now to Darren. Darren, welcome, and thank you again so much for delivering this webinar this afternoon, and we really look forward to hearing your presentation.
Thanks very much, Nicole, and so thank you for having me, and thanks to everyone that's given up some of their time on Friday lunchtime, so that's fantastic. I'm just trying to move the slides ahead. There we go. Nicole's already given a bit of an introduction to Bank Australia, so I won't re-go over that. But I would probably say that through the course of the presentation, where I give examples from how Bank Australia views regenerative finance, that we're by no means the only bank or financial institution that are thinking in this way. So I am trying to give examples of how banks that participate in this way think generally, not specifically about Bank Australia, but certainly we do have a proud history of being a very socially aware bank. And one of the benefits of that for us is that we draw heavily on the interests of our customers who are very socially aware, both retail customers and many organisations, including those that are in the circular economy. So we've benefited greatly from that in our thinking. In terms of my role, as Nicole said, I'm the head of Impact Finance. So my role is to grow Bank Australia's impact lending and investment. And I'm very mindful that requires a little bit of an explanation and definition. So for us, impact lending and investment is where organisations or projects have a positive impact on the environment or society. So most of our clients in this space are not-for-profit or for-purpose organisations. A lot of the lending and investment we do is in community social housing or disability housing, or in the field of clean energy transition. But we're not limited. So we hear from lots of organisations that do varying good things, and we do assessment as to whether or not the work they're doing is impact, and if so, whether we're able to lend to them, primarily lending. So just in terms of talking about what regenerative finance is, I was mindful coming into this presentation, when I think of regeneration, I often think of it more in the kind of biological or geographic sense. And banking and finance are nowhere near as interesting as that. The regenerative version of finance is really rethinking about how funds are used when we deploy them. So for a bank, that's in the form of loans. For a superannuation fund, it's more broad in terms of equity and lending. So on the left-hand side of this slide, I've talked about what traditional finance is. So in a banking context, someone comes in and deposits money with the bank, and the bank pays them an interest rate on their deposit. And what that depositor does or doesn't think that we should be doing with their money doesn't really heavily influence how we use their money. So we say, thank you for the deposit. You come back and we'll give you your money back when you need it, but we'll make the decisions about the lending that we do. Regenerative finance kind of reconceptualises that and recognises that our sources of funds have expectations about how those funds are used. And so in our context, in a banking sense, we try to make sure that how we use those funds reflects those expectations. On the diagram here where I've shown regenerative finance, I've also included other stakeholders. So when we look at how we bring our sources of funds expectations to life, we're very mindful of drawing on other stakeholders who may not be sources of funds. So not-for-profits, governments, industry bodies who can help us ensure that we are meeting our depositors' expectations. So in terms of what that means in practice, the first aspect of that from our perspective is drawing very clear lines in the sand of what we don't invest in. What I've put up there is Bank Australia's screens, the things that we won't lend to or invest in. So fossil fuels, live animal export, gambling, the arms industry and tobacco. And on our website, you'll see a lot more detail about what we mean by that, because they're very high level sort of call outs, but there's a bit of detail below those. As I said, we're not the only bank or financial institution that has screens by any means. I think you'll find that most superannuation funds have some variation on screens, as most banks do as well. Probably looking at that list, tobacco and the arms are the most common. So you would see sort of more financial institutions would have those as screens. Fossil fuels is probably a less common one for a bank to have, but they will all have some sort of screens. There's a little bit of sort of academic debate about how useful screens are, about what does it actually achieve that Bank Australia won't lend to the fossil fuel industry if someone else will lend to them. But we think they're very important from our perspective. First of all, they're very important to our depositors and our providers of capital who want to make sure that their funds are not being used to fund those things. But secondly, and when I move on to the next slides about what the positive things are that we do, you can't have a positive impact on society if you're also having a negative impact somewhere else. They don't net out. You can't aim for a neutral position or a net positive position. So we find it very important to draw these lines where we draw them. It's not always black and white, as much as it might seem very clear what these screens are that we won't do. We do often get challenges as to whether we're making the right decisions. A common example of a grey area might be a hotel that has pokies that might want to put solar panels on their roof. I won't get into the micro of how we deal with that, but it just shows that, well, there are actually some situations where we need to think more carefully than simply, hey, here's a blanket thing that we will or won't lend to. But so there are our screens. But probably the more regenerative focus of what we do and meeting our depositors' expectation is what we do invest in. So having gotten through what we don't invest in, here's the list we have of our specialisations. So it is not an exclusive list of what we consider to be impact by any means. It's just a list of areas where we have subject matter specialists in our relationship lending team. So individual customers, obviously. So we are a bank, we do home loans. I want to make it clear when I talk about some of the impactful lending that we do, ultimately it's a proportion of an overall lending book that includes home loans. We do housing for people with disability, actually also do a lot of community housing and social housing to not-for-profit housing providers. Better housing developments. So at the moment, we do a lot of construction development lending to property developers that are building very high energy efficient homes, renewable energy projects, and not-for-profit organisations. I haven't specifically called out for-purpose organisations or social enterprises, but they are certainly there as well. And that's what I mean by this list is not an exhaustive list. Whenever we look at a new loan or project, we do a non-financial impact assessment. So the way banks work is they do credit assessments to see whether someone can afford a loan. But before we go down the credit assessment path, we do a non-financial impact assessment. So first of all, to make sure, obviously, that a loan isn't transgressing one of our screens, although that's usually very straightforward for us at the point that we're looking at an actual formal application. But the second is to actually make sure that we're fully understanding the non-financial impact that the project is going to have, and that we're comfortable that it is that it would meet our stakeholders' definition of what impact is. One of the key changes that has happened over the last few years is that this question about whether or not something has impact has probably shifted a little bit to, well, not only does the end product have impact, but also how is that achieved? So how is it being built and how is it being made? So that really reflects a lot of the work that we do in construction lending for housing. So previously, we might have been very happy that at the end of the process, we had a 7-star NABERS home or a property that would have been built for people living with disabilities. Now we pay a little bit more attention to the actual processes behind that construction. If we're looking at a property that is not highly energy efficient, well, why not? Is it that the developer has looked at it? Maybe they haven't. Is there something that we can bring to that discussion? And we certainly allow a lot of our thinking around the process side of what we're doing to those organisations in the circular economy community that are our customers or stakeholders that we've learnt a lot from. So with that, I might just move on to some of the examples of what we mean when we say this positive lending. So the first of these is our clean energy home loan. So Bank Australia gives a discount to individual customers that are building or buying a highly energy efficient home. So generally, for those that know about property energy efficiency, it's 7-star NABERS, but there are other qualifying paths, in particular things like passive house or other construction methods. So it's a bit too detailed for me to go into here, but there's a lot that people can do without necessarily hitting the 7-star NABERS that we'll give the discount for. But as a result of having that home loan, we've actually learnt a lot. We received a lot of advice from people that are in the construction industry about things that we should be thinking about when we set the parameters for when we will provide a discount. So we've actually engaged heavily with organisations that do the energy efficiency assessments. We've received support from the Clean Energy Finance Corporation in guiding that. We've worked with the Victorian Government Energy Efficiency Assessment team. So we've actually learnt a lot more about housing efficiency than probably we thought a bank ever would. I think there's a surprising number of people working in our call centre that are having conversations with home builders about the ratio of window size to the walls and which direction they're facing in, which has been fantastic for us and a really good example of us actually leaning into the stakeholders that wanted to speak to us about this issue. So yeah, as I say, the Clean Energy Home Loan, not just an example of a product that achieves regeneration in terms of improving Australia's housing stock, but a great way for the bank to have learnt about the processes in terms of delivering those assets. The next one I wanted to talk about was environmental upgrade agreements. So some of you may have heard about environmental upgrade agreements. They're a particular type of a loan, and it allows businesses to make upgrades to commercial properties for a range of environmental and sustainability initiatives. I've put a picture of solar panels there. That's the most common use of an environmental upgrade agreement, but it's by no means the only. And we've used environmental upgrade agreements to do things like improve acoustics, better waste management practices at a building. So things that involve a capital upgrade, so an outlay of funds. So it's a very innovative finance mechanism, and generally we're using it to lend money to organisations that wouldn't be eligible for a loan in other ways. They maybe wouldn't have access to finance. The loan actually becomes attached to the building that the adjustments are made on, and it gets repaid as additional council rates. So the primary benefit of that is that it enables us to do really long-term lending. So normally a bank wouldn't do a commercial loan for environmental upgrades for particularly long periods. We would expect it to be repaid very quickly, but these loans can be for up to 20 years. This allows for a lot of the, in particular on the energy efficiency upgrades that save on energy bills. It enables them to be cash flow positive straight away because the repayment liability is a lot lower than the energy savings. Well, this I've put in here is a really good example of banks needing to think harder about the type of lending that they do. So this isn't a particularly easy lend to do, but for us as a bank, it involves not just dealing with the borrower, but dealing with the council. The councils have been fantastic to deal with. The minute there was a bank, and there's a few banks that do environmental upgrade agreements, the minute there was a bank that was willing to go down this path, the councils were really happy to work with us. but it's a little bit fidgety relative to other bank lending, but we think it's very much worth it. And we think, going back to the original purpose of regenerative finance, it's very much about listening to what our depositors and stakeholders want us to be doing with their money, which is lending for energy improvements. So it's a great outcome. So that's more on the energy side of things, but there's one example I wanted to include here, which is a loan to a not-for-profit disability services organisation, which is Interchange Gippsland. So this example is actually on our website, so I'm not providing private information here, but this is a great example of a not-for-profit that was actually operating, had grown significant demands on their service, and so they'd outgrown the premises that they were in. It's a very easy one for us to put in the impact bucket. Obviously, when we did our impact assessment, we didn't have to think too hard about whether this was having a positive impact. But in the interest, this is getting back to the regenerative element of what we're trying to do. It very much reflects the fact that our depositors have views on the types of society that they want to live in, and that should mean fair and equitable access to services for everyone. And so we feel this is very much delivering into their expectations of where they would want us to be lending. We do a reasonable amount of lending to what we call the disability services sector, and a lot more to the disability accommodation sector to provide appropriate housing for people living with disabilities, purpose-built housing, and in particular dealing with some organisations that are actually moving people with disabilities out of inappropriate care and aged care into purpose-built accommodation, which is fantastic. So the final plank of regenerative finance, as we look at it, was something that I almost wasn't going to put in here because it gets down to our operational footprint. So how we bank, the attention to our own supply chain, our building energy efficiency, our consumables. And the reason I wasn't going to put it on here is this is almost a little bit hygiene. And I think most organisations, certainly most banks, but most corporates these days would have their version about their sustainability practices, what commitments they make. But I think the main reason that I wanted to put this in here is that probably our thinking has shifted a little bit in the last few years, and it's coming through other sectors of finance as well. In the past, we've been very keen to make numerical commitments with dates on them, and they have been important. In 2011, we became carbon neutral, which was quite early. 2019, we ran off 100% renewable electricity. But I think there was a tendency back then for organisations and certainly banks to think that there were these points in the future that we would just get to and then we would stop. Whereas our thinking has moved a little bit far more towards continual improvement. And that was one of the big drivers for us to become B Corp accredited. So I imagine there's many people on this call that are aware of B Corp, maybe some B Corps on the call, but for those that aren't aware of the process, it's not really a set and forget type of process. You get the B Corp score, and depending on what that score is, you're able to become a B Corp. But we're very focused on improving that score year in, year out. And I think that's really the shift in mindset to our operational footprint and how we look at it, is that there's not some magic date in the future where we tick a box and say we're done. We're constantly improving. And this is one of the key areas where we've very much benefited from the circular economy community in informing our practices. And the geographic communities in which we work, in particular the local community where we have our conservation reserve. We do have a few forward commitments, and we should, and that things with dates on them, but more or less what we really want to say is that we will always keep improving in these areas, and we need our stakeholders to be loud and in our ears about what the best way to do that is. So if you are working in an organisation where you feel that we would benefit from hearing from you about what you do or about what we do, please do use your voice, because we're very keen to hear and to have our practices influence in that sense. So my last slide here before we go on to some Q&A is just about finding your place in regenerative finance. So hopefully when you saw that first slide where I sort of introduced what regenerative finance is, you immediately saw that there was some capacity for you as a stakeholder or a customer to actually have some say in what your bank, and I mean any bank, not Bank Australia, but any bank or superannuation fund does with your money. You will find banks and superannuation funds and other financial intermediaries far more willing to listen than they've ever been in the past. I think, rightly or wrongly, that might be a little bit of a reaction to the Royal Commission, but a recognition that there is a degree of social license that we operate with, and that so we need your input to operate within the realms of that. So as customers, considering what your bank does with your money, considering what your superannuation fund does with your money, asking questions. We get lots and lots and lots of detailed questions about our responsible banking policy that set the screens and both the negative and positive screens. We get a lot of scrutiny about both our negative and positive screens. We got a lot of press recently regarding our stance on live animal export. We are very, very willing to engage, and you'll find that most banks and financial intermediaries have teams of people that are really, really keen to get feedback and answer questions in that regard. So if you are a customer, that does entitle you to, in any bank, to be yelling and screaming and asking questions and demanding answers. I've put a little bit of a session on there about requiring investment and lending. So obviously that's the nature of what I do, and I'm sure there are many organisations looking to scale what they do by gaining finance. I've not gone into detail here about how you get a loan or investment, mainly because everyone's circumstances are quite different. So most conversations we have with organisations that are looking for lending and investment, they're all very, very specific to the circumstances. And for that reason, I would say that if you are looking for investment or finance, do reach out to your bank, an advisor, to ask about the suitability of your business. I've said that just be careful about how you structure your approach, because a lot of the time when we deal with organisations asking for finance, they're not really sure whether they're asking for equity or debt or philanthropy. It's okay to ask for any of those things, depending on who the financier is you're talking to. It's probably just worth getting an idea first, what type of finance that you're asking for. The process of getting a loan from a bank for a commercial organisation is really quite different to a mortgage. So for those of you that have had a residential mortgage before, would be quite familiar with that process. It is a longer process and a more detailed process for a commercial loan. But the final thing there is as a stakeholder. So let us know where we need to make a difference. Tell us about your area of concern and expertise. Where in our practices do we need to be mindful of your area of expertise? Where do we need to change? And also, how can we profile your work? So I certainly know with Bank Australia, but I imagine with other financial institutions as well, we have a social media presence. We're very keen to give a shout out to organisations that we feel are doing good work that's aligned with our values, whether they're customers or not. So, yell out, reach out, let us know how we should be thinking about your area of expertise. So I think that's my final slide, and I think we're going to move over to Q&A. Nicole, shall I throw back to you?
Yes, thanks so much, Darren. That was so inspiring. I've just written down a little comment here. Inspiring and value-driven lending from what you presented there. It's really fantastic. And we've got some excellent questions in the chat. We've got 112 participants, but 11 questions plus one I've sort of answered, I think. We've got a few vote ups on some of these questions. Let's see how many we can get through. We've got about sort of 10 or 12 minutes, I guess. So I don't know if we can answer 12 questions in 12 minutes, but we'll certainly give it a go. So the first question that we've got here, actually one that I sort of answered, and I'm not sure if you're aware of what this is. Darren, are you aware of something called extended producer responsibility? Is that term familiar to you at all?
It's not to me, no.
No, okay. So it's one that I kind of answered, and Keela, I'm happy to continue that conversation with you And perhaps Darren could make some further investigation, but we might come back to you, Keela, with some more detail on your question post the event, if that's okay. The next question we've got here, how do you balance financial return and non-financial outcomes of investments? That's from Tom.
Yeah, look, I think we see the non-financial aspect to us is, I guess, a binary drafting gate. We're not at the point of saying, we almost don't draw a distinction between degrees of impact to say, well, look, given how much impact you're having, here's what your lending rate will be. So to us, it's very binary about whether an organisation is having impact or not. And at that point, we just move into the commercial discussion about lending rates that probably don't look that different to any other bank. We do have the capacity to give reasonable discounts for highly impactful organisations. That's generally on the not-for-profit side of things, but you would look at those lending rates and they're still not that different to sort of residential mortgage lending rates. But yeah, on the non-financial side of things, one of the things we're very mindful of is not placing a burden on the borrower to have to come back to us to prove metrics. So we do try and do the non-financial impact at a little bit of a distance, rather than saying, right, okay, well, we'll lend to you, but we want you to go and achieve these metrics and we want you to report to us every 6 months on the number of things you've done here, there, or everywhere. We would actually love that information because we think it would be of benefit to our members and stakeholders, but we're just very mindful for a lot of the organisations, you're just putting an additional burden on them.
Yeah. Thank you for that answer. Tom, I hope that answered your question. We've got another couple that have got some votes on here. The next one is, Jamie wants to know, what is the criteria for funding the not-for-profits or for-purpose organisations? Do you have a circular economy roadmap that you're aligning to?
We don't have a circular economy roadmap that we're aligning to. That might be a good example of something that we ought to get some feedback on if someone thinks that we should have. In terms of what are the criteria, I'm not sure if that's a question about the impact criteria or the sort of credit criteria. It's a bit hard to go into the credit criteria, but one thing that I would certainly say is our primary credit criteria is that the organisation can afford to repay the loan. And I know that might sound reasonably obvious, but we're more concerned about them and their finances more than necessarily our credit. But on the non-financial side of things, we don't put any hard lines in the sand about what we consider impact. And I think there have been many examples where we've initially said, oh, that doesn't sound right to us. But what our actual response is, we need to learn more about why that's important. And so we've been very open-minded with a lot of organisations, if it's something that we don't know very well, to learn about what should we be caring about as the impact, what impact are you having? And I think it's reasonable to say there's quite a lot of organisations that we have as customers where we weren't even aware that there was an underlying issue that needed impactful resolution until we were engaged by them. So if there's someone out there that is not sure whether they would pass the impact drafting gate, reach out, because the fact that I haven't mentioned that area possibly means that I need to learn more. Not that we've made any decisions.
That's great. Thank you very much, Darren. Grace's question's got 3 likes on it. So those who are in the audience, if you are really keen on some of these questions, just click on the little hand symbol and that can vote for you. Grace has said that financial institutions need to balance a lot of different investment risks. By limiting the industries you invest in, you are reducing your ability to diversify your investment portfolio. Does that make investing in an organisation such as Bank Australia more risky? That's an interesting question.
No, so people should certainly have a lot of faith that the regulator ensures that any funds with Bank Australia are not invested in a risky way. So all our lending is done with the oversight of our prudential regulator and within a risk appetite that they sign off and in compliance with the prudential standards. That issue of when you screen industries out, are your returns the same? It's a bit more of one for the superannuation industry, because if you're a depositor with us, your return is contractual. If you have a term deposit,
Right.
you'll know what rate you're getting. If you give your funds to a superannuation fund, your return isn't contractual. They're going to try their hardest to get you a good return on it. And there's academic literature on whether screening industries out limits their ability to do that, but it's not really a banking issue. But it's a really good question to raise. Yeah.
Interesting. Okay. This one here from GT has got 8 votes. So your activity examples mainly include mitigation. So for example, reducing energy, etc. Can you comment on any climate improvement activities that Bank Australia supports, such as carbon sequestration, regenerative farming, etc.?
Yeah, we've had a little bit of a look at regenerative farming, and there are some great projects out there. The reason we haven't been very involved in those projects is that they're probably a little bit big for us. So given our size relative to the size of a lot of those projects, it probably requires a larger lender. On the sequestration side of things, so we've looked at a little bit on the technology side. Most of the organisations that we've had a look at require equity finance, not a bank loan. So that's not a reflection in a lack of creditworthiness. It's more the life cycle. We have, that's quite right to observe that that's not where we've done a lot of our lending in the past, but it's not because we've ruled out doing it. We just haven't had the right candidates come before us. Yep.
Great. Thank you. I think Doe Artman, I think that might actually also address your questions at the same time around investing in land and protecting habitats, etc. I might just flick down to, I think Ryan might have already had his question answered as well, but Ryan's question is, how does Bank Australia ensure both sides of its balance sheet are not exposed to those sectors you have outlined, such as live export, gambling, etc.?
Yeah, so we have, it's a really interesting question about both sides of the balance sheet. So the controls we have over our lending are very different to the controls we have over who we will accept deposits from. But ultimately, so we have a responsible banking policy that is signed off by our board, and that board is, so those screens that you saw I put up on the screen are the kind of the very high level of those. The responsible banking policy is about 15 pages, and that establishes the mechanisms for actually implementing it. So on the new lending side of things, we do industry screening when a new loan comes to us, and everyone involved on the relationship and credit side is aware of our screens and what the various industries are. Sometimes it involves asking further, deeper questions because not everything is very clear. I've had staff that have been known to go into pubs to figure out whether or not there were pokies because they couldn't figure out by looking at the website. It's very simple fact. But that's the level of due diligence that we need to do.
Yeah.
In terms of obtaining funds from those organisations, so the process of actually opening an account is different. So it doesn't have a credit review process. So we rely on our branch and call centre staff to actually vet those. We find, given our position in the market, we don't get a lot of new account inquiries from people that are in those industries, but we do, and we've certainly been known to turn depositors away on the grounds of their poorly values aligned. So, but it doesn't come up that often, but we certainly do have controls in place, and we're on the hook for reporting. If we were to transgress one of our screens, you would see it in our annual report.
Right. Okay. I've got a follow-up call. We've got 6 votes back for Doe Artman's question on, does Bank Australia lend for those buying land to protect and hold habitats or native vegetation?
Yes, we do. So we've lent to a few organisations that we've done that. We've actually lent to a few private individuals that have ambitious projects in that regard as well. So one of the things that we look at there is the ability to ultimately repay the loan. So if you're buying land to protect it, how would you repay the loan on the assumption that you're not then going to sell the land. But we certainly, not everyone that's buying land, that's not the only thing they're doing. So there's plenty of people that can repay a loan without needing to sell the land. So yep, we do that lending. We're very aware of what the use of covenants is, because we have covenanted our own conservation reserve, and we've worked with people that have been putting covenants before. And so I think for a lot of lenders, that's an obstruction because of the impact it might have on the valuation, depending on what the land could otherwise be used for, but that's not an obstruction to us. So yes, we do that lending. Yep.
One extra, sorry to interrupt the other questions on the call there, but following on from that, Darren, I wonder if you had a group of individuals who are quite passionate about purchasing land to restore its habitat or maintain its habitat, is there something that a group of individuals can do to gather up and get a loan from Bank Australia to do something like that? Or is it more just you have to develop a trust and, go through that process?
It's easier to do as an organisation. So it would be easy for those individuals to form one entity to do the borrowing out of. Yeah.
Yeah.
Otherwise, you rely on making an assessment across a large number of people's finances. But we've certainly done that. It's more common to do that for 2 or 3 people than 9 or 10. But,
sure. Okay. Yeah. Okay. Thank you. Karen's question, Karen says, thank you for the presentation. Really interesting and great to see the work being done in this area. Karen's question is, what do you see as the key difference between regenerative finance and sustainable finance, if you see a difference? And do you have any examples of circular economy principles being incorporated into regenerative or impact loans? So do you see a difference between regenerative finance and sustainable finance? That's the first part.
I'll kind of answer that a couple of different ways. I can in that sustainable finance is often used to describe I guess perhaps a lower bar than I've described there in regenerative finance. So you could certainly refer to what we do as sustainable finance, and a lot of people would. But there's, I think, a lot of organisations that would refer simply to the process of screening and saying, well, this is sustainable finance because there's some things we screen out. At the point you've actually said, well, actually, we need to do more than screen. We need to do something positive. That's where it is in more regenerative, but it's regenerative in the finance sense of finance people suddenly thinking that loans could be used for good. It's less that sort of biological or geographic use of regenerative, which is then quite specific. So I think the second part of that question was about any circular economy focus.
Examples,
we've certainly we bank a lot of organisations that are in the circular economy. We have them as our customers. I'm trying not to name organisations from privacy perspective. What I would say for a lot of those organisations is that they've not come to us asking for large loans, and that's fine. So a really important part of what we do is making sure that we do the loans that organisations need, not that we sit here and say, well, we like doing big loans, so if you don't have one, don't come to us. So for most of the organisations that I can think of that I define as being in that space, we simply do credit card facilities, which is a loan in a sense, even though probably they're just using them to make payments. We certainly do have facilities, including some smaller unsecured facilities. And I would emphasise that no matter how large or small the borrowing requirement is, that we are open to hearing from organisations. Great.
Thank you so much, Darren. Wow, you all have just done such an amazing job at putting your questions in the Q&A, but I'm afraid we're out of time. But what we will do is Darren has kindly offered to have some responses post the event to your questions. So we'll come back to those in the next week or so as well and see if we can support you with that. But Darren, you've given us some amazing ideas today on how we can both be educated on, in our own investments, but also how to find your place in this concept of regenerative finance based on your experience with Bank Australia. So for those in the audience, thank you again, Darren. It's awesome. If you're seeking some more information on this concept of impact investing, as the banking industry calls it, you could visit something called Impact Investing Australia. So you'll find Bank Australia listed on that website, along with other organisations. We're making some fantastic impacts across the country. We'll share that link as well when we post the video next week, along with another bunch of links that can help you learn more. So thank you all for taking the time out of your Friday to come and have almost a lunch and learn with us and with Darren. We really appreciate you participating with your questions in the webinar. We hope it's been informative. And hopefully you can start to explore your regenerative finance opportunities as well, and your banking investment activities. If we've got a quick minute, if people don't mind hanging on for a quick minute, we've got another poll. We're going to pop it on the screen right now. But after seeing today's webinar, we're interested to see how many of you are, how inspired you are to take some action around to find out what your bank and super fund is doing with your money. Great, lots of very inspired, excellent. And some already taken action, that's fantastic. That's excellent. Well, we're really, really excited that we've been able to support you and you know, starting to feel a little bit more comfortable about what these questions are that you need to start asking. Thank you again for that. So finding out more about our upcoming webinars, we've got roughly one every month, but we're trying to ramp that up over the next coming months to maybe once every 2 weeks. Please feel free to subscribe to the ACE Hub. If you're not already, you'll find out all of the information that you need to know about keeping up to date with our work. You can also subscribe to the newsletter through that function, and you'll find that recording later in the week. So at the end of this webinar, when we close off just now, if you could stay on for another few seconds and just answer the couple of questions that we have at the end, that would really help us guide the upcoming topics that you're interested in. And thank you again to everyone who's joined today. Thank you for giving up your time in preparing for this session today, Darren. We really, really appreciate it. And all the best to everyone in the audience for continuing your journey towards circularity. We look forward to supporting you. Thank you so much.